Happy to speak to you. I do want to speak to your specific issues. If you do have anything, be sure and ask me. I do have an outline that we're going to follow to try to at least give you some ideas in case there's some taxes you didn't know about that maybe you need to know about. We'll touch on that too. We probably could talk for days about this, so this is an outline over everything. As Alex said, changes. Things do change in the tax world all the time. Every time someone else becomes president, every time, I don't know, it seems like every year there's levels of things that changes, like the brackets will change with consumer price index or something like that. So don't memorize a number, know that it exists and know how to look it up is basically how I rock and roll with that. So I do taxes, I do personal taxes, probably 80% of my clients have companies, small companies. We do small businesses. So I should know most of what you might need to know. Let's see, we'll just get started here with what kinds of taxes small businesses can have, and I don't know if you can see all that. There's federal income tax, which I'm sure you're all familiar with because you file your own federal return, and you may have a business return, or your business may be included inside your personal return. State income taxes. We live in Texas. We don't have state income taxes for ourselves or for our companies. That doesn't mean there aren't any state taxes. They're just not income taxes. But you may do business in another state as well as Texas. These days, we do businesses all over the United States, so you may have some state income taxes. State franchise taxes. Texas does have a franchise tax. This year, you have to gross over 2.47 million before it comes into play. So maybe it's not a factor for you, but this is gross, not net income. So you could have $3 million of gross income and even have a loss as far as net income goes, and you would still owe Texas franchise tax. So just be aware it's out there. There is if you have an entity filed with the state, you still have a reporting requirement, a Texas franchise reporting requirement, but no tax that's due annually, and we'll get to that. State and local taxes. Many of you probably know about sales tax. If you sell a good, and for many services, there is a sales tax component, and you have to report those and pay those. Local property taxes, if you own property, or even if you don't own real property but have business property in your county, they will collect property taxes on those. Federal excise taxes. There are certain industries that have excise taxes. We'll talk about that. Payroll taxes. If you have anybody on your staff and they are an employee, you may have payroll taxes. So, are any of those any that you've never heard of before? So excise tax is one that doesn't come up often. Maybe the franchise tax you might not have heard of. Federal income taxes. This is the one we probably are most concerned with because it's what we probably all have to do. It's dependent on the kind of entity you have, what kind of tax return you file. And I have all those. I don't know what you can see up there, but we'll start with the simplest entity is the sole proprietorship. And that's where you own 100% of your company. And so you and your company are kind of the same thing. That tax return is done within your personal tax return. So it's a Schedule C or a Schedule E if it's a rental real estate business that is inside your 1040 tax return. The 1040 is the number for your personal tax return. Partnerships. If there's more than 2 people that own a business, and they are not husband and wife in the state of Texas, it is a partnership. In the state of Texas, if you're husband and wife and you own a business, because we have community property laws, you can be considered one owner, and you can therefore include that business on your personal return, and you aren't required to file a separate partnership return for that. Anywhere else, it would be a partnership return. If it's you and your brother, you and your next door neighbor that own the business, you'll file a partnership return every year. I believe there's some numbers up there, but if you want any of the numbers, like a partnership return is a 1065 return. It's due March 15th, unless you extend it, and that's the deadline Alex was talking about. March 15th is in 2 days, so partnership returns are being extended right now. Their extended due date is September 15th. Personal returns, when we talked about sole proprietorship, and you probably know your due date, April 15th, or you extend it, and then it's due October 15th. And we'll talk a little bit more about that in a minute, about the extensions and what that means. There's S corporations and partnerships are called pass-through entities. And what that means is even though you file the partnership return, you do not pay tax at the partnership level. It flows through to the owners. So you get a form from that partnership return called a K-1, and that K-1 gives you your share of the P&L, the profit and loss from that entity. So if you and your brother Jack own this business, each one of you will get a K-1 that you then use on your personal return to put your share of that business's income or loss on your return. An S corporation, that's another type of entity that is a flow-through entity, and it can be 1 to, I think, 100 shareholders in a small corporation. And the shareholders are similar to partners in that they each have a share or an ownership in the company, and that the profit and loss flows to each shareholder. They each get a K-1 similar to a partnership that they put on their personal return, and the tax is again at the personal return level. I think I've mixed my order up here, but a C corporation is its own entity. So I'm Laura Welker. I could have Laura Welker CPA Inc., and that entity would be its own thing. I wouldn't have any liability on that because it's a C corporation and the shareholders don't have liability. But the business itself is contained and taxable at the business level rather than at the personal level. Well, there's other flow-through entities went down to your personal return and are taxable at the personal level. The C corporation pays its own tax. It has its own tax deadlines and estimated tax payment times, and everything's just done at that level. If I want money out of my company, I either have to be paid as an employee or I get a dividend. Maybe some of you own stock with big companies like GE or AT&T, and you get stock dividends. That would be the same thing with my own personal C corporation. If I wanted that money out, I would pull it out as a dividend. You may have heard of double taxation in a corporation, and that's why, because my C corporation was taxed on its income, and then when I pulled the money out, I'm also taxed on that income.
Question, if you back up.
Yes, ma'am.
You said there were two types of entities that are passed through.
Mm-hmm.
The second one was S corp. What was the first one?
The first one was a partnership.
Partnership.
Mm-hmm. Then I'm sure most of you have heard of limited liability companies, LLCs. It's very popular these days for people who are in business to have an LLC. So it stands for, like I said, limited liability company. It is not a corporation. An LLC is not a federal entity. So the federal government doesn't tax LLCs per se because they're LLCs. Instead, an LLC can take on many structures. An LLC can be owned by one person, one member in that LLC, and then it's called a disregarded entity from a federal standpoint, meaning that's not a separate tax return that has to be filed. It's just considered you own it 100%. It goes on your sole proprietor return, which is your Schedule C of your personal 1040 return. An LLC can be owned by more than one member. Then it follows under either the partnership rules or the S corporation rules, and an LLC can even be a corporation. So when you form an LLC, that's at the state level. You're forming that with the Secretary of State of Texas. And then you go get, well, we'll talk about this too. You go get a tax ID number, a federal tax ID number, and they ask you when you fill out that form, what kind of entity are you? And at that point, you need to know that I'm a sole proprietor, or I'm a partnership, or I want to be a corporation and file an S corporation, which is actually a two-step process to get to that. But anyway, an LLC isn't a corporation, and it isn't taxable by itself necessarily. It can be, or it can be any of those things. How many of you have filled out a W-9, which is where if someone pays you more than $600 in a year, they have to file a 1099 for you. And to do that, they need your tax information. So they'll hand you a W-9 and say, can you please fill this out for me? And you have to list what kind of company you are. Well, on that form, it has LLC, and then it gives you choices. An LLC that files as a sole proprietor, a partnership, an S corp, or a corporation. So you can be any of those things and still be an LLC. I think you're glazing over here, so we need to get to something that will help you out a little bit. Let's talk a bit, since there are a couple of flow-through entities, the partnership and the S corporation, you might think, well, why would I have one over the other if you have more than two people owning a company? And I'll tell you that a partnership is more flexible. It's probably a simpler kind of structure, and the income just flows to the people who, you don't have to have any payroll if you're the only two people that work for that company. Instead, your K-1 serves as your conduit for your earnings, and it's self-employment earnings, and then you pay payroll taxes on those earnings through your personal return. An S corporation is a little less flexible. Only certain kinds of entities can be owners in an S corporation. It may provide you a little more liability structure, as far as people couldn't sue you and get to the assets, to your personal assets, if you're a member of an S corporation rather than a partner. You do have to take payroll, and there was something that slipped my tongue, or slipped my mind here, about the S corporation that makes it a little less flexible than the partnership. I'm sure I'll think about it and get back to it. Let's see.
I think it limits the number of shareholders.
Yeah, it limits the number of shareholders. Oh, you can only have the same kind of shareholder. When you make distributions in an S corporation, they all have to be made equal to each other. Like every owner has to, if you're giving 25% to Jack, you have to give 25% to Sue, as far as the distributions go. Where in a partnership, there's just more flexibility. Okay, where do I find tax forms? How many of you do your own taxes? So you probably use TurboTax or some kind of program. There's Free File on online too. The free filing things usually don't work for people with small businesses because your return's a little more complicated. TurboTax is pretty good. It walks you through the different steps of doing your tax return. If you didn't have these things, thank you, Alex, you could go to irs.gov, which is the IRS website, and they have forms and publications to get any forms you need. If you need a W-9 to send to somebody because you need to file a 1099 for them, you can get that off there. If you have employees and you need them to fill out a W-4, which tells you the information for setting up payroll, you can get that off there, off the website. I use it every day just to look up forms and publications. Publications, if you have a question about a certain tax item, there's probably a publication about it. And you can read about small business taxes. You can read about your automobile deduction. You can read about personal things, like if I sell my home, what are the exemptions on that? there will be a publication out there, and you just go out and pick forms and publications on the IRS website and search for the thing you're looking for, and there's a lot of good information out there. It's not the worst website I've ever been on. It's pretty easy to maneuver around. Do I need a professional tax preparer, or can I prepare my own taxes? I hope you can prepare your own taxes. I would like to think that our tax system is such that everybody could do their own taxes, but it has gotten complicated. If you have any questions, you should at least ask a professional about it. There might be some things you're missing. The TurboTax will probably do a good job, and I guess I would say don't be afraid to try your own, but if it fails and you want to get a professional, you can. Where do you get that professional? Well, I saw there was someone right down the corner here that has a tax office and a bookkeeping office. And there's a directory at the IRS that you can look up that will give you in your zip code all the people that they have that are registered with them to prepare tax returns. So I noticed on it they don't give you information like I looked myself up. It doesn't have my phone number or anything, but it says my name and my zip code and that I'm a CPA. It tells you what their credentials are. So if you want an enrolled agent to prepare your return or a CPA, you can go there and at least find the name, and then thanks to Google, you can look up something and find where that person is and get somebody you need. What's an extension? And why would I need one? Well, an extension is an extension of the time you need to prepare the return. It is not an extension of paying your tax. So the IRS doesn't care how long it takes you to get the return as long as you've given them their money. So why would you want an extension? Oftentimes you don't have all your information ready by the tax deadline. A lot of times it's just that's a busy time of year for you. That might be your busy season from the standpoint of your business. As long as you've made an estimate and paid your taxes up to what you think it's going to be that year, an extension can be a great thing. If you think about that, if you do have a tax preparer and you have them do your taxes, they have all these returns coming in March and April. If you want really good work on your tax return, you want to give them all your information in May or June when they are done with their tax season and before the next crunch starts right before extensions. So I get an extension myself every year. And there's different ways to do that. So it's called a Form 4868. If you have TurboTax or one of those, it will be in your TurboTax software. You can go to the irs.gov and get that 4868, print it, fill it out, mail it in. It needs to be postmarked by April 15th. It doesn't have to reach the IRS by that, but if you're putting it in the mail, I would do something to prove that you've mailed it, like actually walk in and hand it to the person at the post office to get a receipt that you can write, this was for my extension. If you're doing it on through your CPA with, and they've e-filed it, they'll have like a stamp that gives the time and date it was filed. So there will be proof that it was filed. You want that because if the mail doesn't deliver your extension and the IRS came back to you and said, you owe tax, you get extra penalties if you haven't extended. So you want to be sure you've hit that extension and avoid those things. If you're a business and you are a partnership or an S corporation, the form is going to be a 7004 is the extension. Again, you can print it, send it in. There's no payment that you have to make with an extension. You're supposed to make a good faith estimate of what your taxes are. And if you haven't paid your tax, they give you the opportunity to make a payment with your extension. How many of you have used irs.gov to pay taxes, to actually make a tax payment? Okay, there is a pay tab. Let's see if that's the next, yeah, here we go. So this is the irs.gov homepage. There's a pay tab right up there, second one over. You just click on that and it takes you to some screens that are similar to online banking where you can make your tax payments for your personal self. You can do your quarterly taxes there. You can pay them any time of the year there. If you're a person who isn't an employee and you are not having your taxes withheld, the IRS expects you to make estimated tax payments of your total tax liability during the year. They'd like you to do these at a minimum quarterly. IRS quarters are not the same as 3 months. The first quarter is 3 months, the second quarter is 2 months, the third quarter is 3 months, and the fourth quarter is 4 months. So the due dates are April 15th, June 15th, September 15th, and January 15th. And you make equal quarterly payments even though they aren't equal quarterly dates. And they want you to pay at least 90% of your tax by January 15th, that last payment. And then the last 10% of your tax you can pay by April 15th. If you do that, you will have no penalties. Often with a small business, your income is not equal throughout the year. So there's another way to do it, and that's to have your tax follow your income. And that's called annualized income. And you have to prove to them, you fill out a form on your return that says, here's how my income went this year, and that I also paid my taxes in the same way, then you will also have no penalties. If you pay 100% of your tax liability from the prior year by January 15th, you will not have any tax, any penalties either if the rest of the tax is paid by April 15th. That's nice to know if you're in a business where your income's going up very fast, because you don't know, gosh, business is crazy. I'm not sure what it's going to be this year. How do I estimate for that? Well, I know it's going to be a lot more than last year. So if I pay at least 100% of what I did last year in 4 equal payments by January 15th, and then I pay the rest, even if it's another, half as much again as what I already paid, I won't have any penalties, because there's 2 ways. You either pay 90% of your current liability by January 15th or 100% of your prior liability by January 15th in order to avoid penalties. When you are late with your taxes, most of the charge is interest, and the IRS thinks that that money is actually theirs, and since you had possession of it and they didn't, you have to pay interest to them. It's like you took a loan from their money by not paying your taxes yet, and so they charge you interest for that. There are some penalties once you hit some of those dates, like after April 15th. There's a late payment penalty for each month or part of a month that you're late. And if you don't file an extension and then you're late, there's penalties as well. So always file that extension.
Why is their interest rate so much higher that you pay them, but so much lower than they pay you?
That's how everybody works, right? The banks too. Sorry guys, but when I borrow money from them, I'm going to pay a lot more than they're going to pay me when I put money in my savings account. So I guess that's called profit margin. All right, let's see here. Abating penalties. So we did talk about penalties. Everybody's kind of afraid of the IRS. What do I do? Oh gosh, I got a penalty. So if you're late and you have interest charged, you probably won't be able to get out of that interest. You had their money, your money that you hadn't paid yet in taxes, and so they're going to charge you that interest. But the penalty, oh, I forgot to file my extension, or whatever it was, or I count, my nephew had a bad car accident and I missed the deadline because I was at the hospital with him that day. The IRS is not just a horrible institution, and there's always a first-time courtesy that they will extend to you if you have a penalty. You just have to ask. It's kind of like your credit card company, like, oh gosh, I missed that credit card payment and they charge you that fee. Well, if you'll call them on the phone and say, I have a great history of paying this credit card, can we waive this fee? They'll say, sure, and waive that fee for you, but you have to ask. So same thing with the IRS. If you have a penalty, write to them and ask them for an abatement of the penalty. Point out that you've always followed the rules before. This was the reason you didn't do it. Please extend the courtesy of a first-time penalty and abate this. And I've never seen it turned down yet for that first time. They'll always abate it for that. And if you have cause, like I had a heart attack the day before the filing deadline, then you for sure have a reason. But there's always the first time courtesy as well as cause are two reasons you can get a penalty abated. Again, you have to ask, who do you send that to? They'll have sent you a letter for the penalty, so you send it back to the people that are at the top of your letter. So we talked a little bit about quarterly estimated taxes, and we touched a little bit about a tax ID number when we said that if you had an LLC and you registered it with the federal government, you'd need to get a tax ID number. That's called an EIN, Employer Identification Number. And you say, well, I don't employ anybody. It's just me. Why do I need an EIN? Well, if you have an LLC and it's a separate entity, you'll need an EIN. If you have a partnership or an S corporation or a corporation, you'll have to use that for your tax ID. It's like the Social Security number for your entity. Bankers often require an EIN for your company if you have an LLC, if you're setting up an account. So you'll need it for that. Where do you get it? You go to irs.gov. It's going to be, right there. They put it, everybody needs one. They put it right there. It's a few screens where you put in your information, what your company's called, where it was formed, who you are, how you're related to the company, and it'll ask some things about whether you have employees and that kind of thing. And that's because what it's going to do is at the end, it's going to give you the EIN and it's going to tell you what kind of forms you need to file. So if you have employees, you have payroll forms to file. If you are a partnership, you have a partnership return to file, and it should tell you that in the letter it produces at the end when it gives you your EIN. When it gives you that EIN, don't lose the paperwork. The IRS doesn't have a way for you to look that number up. So if you lose your EIN before you've used it, you'll have a hard time, it'll be weeks of writing to them and trying to find out. They don't have just a registry where you can look that up. So they'll give you that EIN online, print it, take a picture of it, write it down somewhere, have it there. That's what you need. And once you have it, that's fine. But I've had clients that say, I can't remember what my EIN was. I got it 2 years ago. My business didn't start up like I thought it would, but now my business is going. What do I do? And you call the IRS and you work with it and try to find it, but it'll take weeks. So I always just double record that number when you get it.
It'll take you like a month to get that form mailed to you.
Yeah. So, but it's instantly online when you file. It'll come up. But researching it and finding it again, it's tough.
Another thing is when your EIN number, make sure that when you go to the internet, there'll be all these companies that want you to go through them, and they'll charge you a fee for the EIN number. Want you to just go directly to the IRS.
Yeah, I would say that too. That's a good point about paying your taxes. So irs.gov, click on the Pay tab. So first of all, I do that myself. Taxes are due quarterly. I pay mine monthly. Why? Because if I have to save up for each month for that quarter, it gets very painful to let go of that money. If you're an employee, they take your money out every time you get a paycheck. It's taken out, and it's a lot less painful and a lot easier to do. But to your point, I could go, if I just go online and pay my taxes in there, there will be 100 companies that'll help me pay my taxes and charge me a fee for that. Where I can go to irs.gov, there is no fee unless I use my credit card. And then it's the credit card companies will charge me a convenience fee. But if I'm just using my bank to pay it, there's no fee. I have clients all the time that use another company and pay a fee, and I have to point this out to them. You don't have to do that. You can do it without a fee. Same thing with the EIN. you don't have to do that. You can do it yourself. All right. One of the things that one of the bankers I was talking to before said was important to them was small business people, how do you keep your books and records? How do you prepare for your tax return? Do you need software to do this? No, you don't, but you might, depending on the size of your business. So books and records are mainly that you want to have your incomes categorized, you want to have your expenses categorized, and the different kinds of expenses, because not all expenses are treated equally when it comes to taxes. If you have business meals, you get a 50% deduction. If you have disability insurance, you may or may not get a deduction for it, depending on what kind of disability insurance it is. If you have owner insurance, like insurance for the owner, life insurance, that's not deductible. So you need to have what you spent, except instead of these are my expenses, 100% of them, your tax accountant or your tax return that you're preparing yourself doesn't want that. It wants what kind of expenses these are, because they aren't all treated the same. You can do this on a piece of paper. You can do it on an Excel worksheet. You can do it on software. But what you need to know is that that you need to give yourself the best advantage by putting as much detail as you can into your books and records. Put your explanations there, because the IRS can come audit you 3 years from now, and trust me, you are not going to remember what that $1,000 deposit coming in was for, or what that $50 check going out was for 3 years from now. And it will just help you out if your books and records are as detailed as they can be and in good order. The main thing I could say for that, the best thing you could do, let's say I'm a busy person, I don't have time to mess with this much, get a separate bank account for your business. If all your income comes into that bank account and all your expenses come out of that bank account, then those bank statements are the foundation for your books and records. Everything is there. You don't have to go scrounging around for it. You don't have to check this credit card and my personal bank statement and my savings account. You can just go to that one set of 12 statements at the end of the year and create a set of books. And if you do that, you will love yourself. Your CPA will love you. And if you ever get audited, it will make it that much easier for you if everything's in one bank account. How do I contact the IRS? Usually it's the IRS contacting you, and on that, on that letter, there should be a phone number, there should be a fax number, and there's an address. And those would be what I would use first before you ever just generically go out and contact the IRS. The IRS does have phone numbers, and I listed them on here, and it will be, I think I go backwards for that. Well, they're down at the bottom in the unreadable print. And I'll tell you, it's a little better right now during tax season where they've staffed up and there's people that answer the phone. But if you're going to call the IRS, use the restroom first, get yourself a good book, and then make that phone call because you may be on hold for a while. They do have callback systems, so you can often leave your number and have a callback, and that's good. If you have a tax preparer, you might want to call them and have them call the IRS. We have a special line. It's a tax practitioner line, and we get answered a lot quicker than you do when we call. There's also a way to set up an account with the IRS where you can have your own login, and then it will have your transcripts and your information. That's nice to know because it gives you what the IRS has for you. Like every year, things get reported on your business, the 1099s that people report to you, credit cards, if you use a credit card to receive payment, that gets reported on you. All kinds of things get reported to the IRS, and that's how they kind of monitor whether we've paid our taxes or not. And you can make your own account and log in and pull your own transcripts and see what they have for you. It also tells what you've paid in. Anyway, I find that helpful. As a tax preparer, I try to get that on all my clients, but you can do it yourself too. Let's see, common forms. So you have your tax form, the main tax form, your 1040 if you're a person, your 1065 if you're a partnership, your 1120S if you're a S corporation. But there's a lot of other tax forms that you probably come in contact with during the year, like a W-4 if you have employees and you need to get their information, a W-2 if you are an employee and you get your information from that, 1099s. A 1099 NEC means non-employee compensation. That's for people that you pay, like a contractor or, and this is as a business, people you pay as a business, a contractor or a workman or something like that. And if you pay more than $600 to these people, you are required to file this form every year. That is helpful to the IRS because it helps them figure out what kind of incomes different people are receiving. You may receive 1099 NECs if you are a service industry and you do services for people. 1099 miscellaneous is like a 1099 NEC. It's just for rents and things other than non-employee compensation. There's rents, royalties, some medical and things like that. I want to make sure that we don't have any more questions about the federal taxes. Does anybody have any specific questions about their business or anything with federal taxes? Yes, ma'am.
Okay. For the federal taxes, like estimating, because our sales are all over. What is, I know you said the best recommendation to try to determine those.
What your income's going to be for the year. So obviously it's easier after you had a couple of years of business under your belt because hopefully things repeat themselves or you have growth and so you know it's just going to be bigger. But you do your best guess and then, you know, you factor that in, like if this is your personal business and it's going to go on your personal return, you factor that in with your other incomes to try to determine what your total is going to be and what your tax would be on that. In your software, in your TurboTax, there should be an estimating feature where you can go in and put what you think your income's going to be your best, and it will come up for you with what your tax should be. And then you can go, okay, that's the number I need to pay, and divide that by 4 and either pay it quarterly, or if you said like have vacillating incomes. For me, I try to give my clients a rule of thumb. So taxes are paid on net income. So it's income minus expenses, net income from a business perspective. But during the month or during the year, you might not have all those things categorized and know what your net income is. You usually know what your gross income is. So if you're a business and you're starting out and you're going to make probably $50,000 or less net income, I'll tell my people, look at your gross income and put 10% of that away for taxes. That just gives you, that's not like a hard and fast number, but it gives you a rule of thumb to use in the meantime until you get more history. If you're going to make like $85,000 gross, $85,000 net, then I would do probably 15% of your gross. If you're going to make $100,000 net, I would probably get to 20% of your gross. And again, that's just a rule of thumb. It's going to vary depending on how much your expenses are related to your income, but that'll give you an idea. And for me, that's easier for my clients. If you have 1 year under your belt, you can look at what was your gross income compared to your taxes and come up with your own percentage that is specific to your situation. And then during the year, you can use that against your gross and pay your taxes that way. And that might help with your estimates. It is a tricky thing because with the income changing, but especially if you have seasonal income and you can come up with a percentage of what is my tax related to my gross income typically, then during the year that's easier. You know, if you've got $100 today and I need to put 10 away for taxes. And then again, for the estimated taxes, you know, I gave those dates: April 15th, June 15th, September 15th, January 15th. So the April 15th covers January through March 30th. So you can look at that income for January through March. That's what you pay the tax on April 15th for. Then you look at May and June, April and May to do that June 15th calculation. And then the next 3 months for your September 15th, and the last 4 months for the January 15th payment. So if you're a business that runs like that, it'll be different. Were you giving me a time? I have 10 minutes. All right, so we've talked about federal taxes. Let's at least...
I think you had a question.
Oh, I did.
Yeah.
Yes, sir.
I just wanted, so I have a guy that I outsource to in the Philippines.
Mm-hmm.
He sends me a PayPal link. I just pay it with my business debit. How do I keep that from? I don't think he files obviously taxes. He doesn't pay taxes in the United States.
Right.
How do I keep that from being an unholy mess?
So if he were in the United States, you would file a 1099 NEC for him. Since he is working in the Philippines, you aren't required to make that filing. If he had a tax treaty, like he was a person who was taxable in the United States, you might have to file a 1042, which is similar to a 1099 for him, but that's probably not the case. It's just he works from the Philippines, does all his work in the Philippines. So for you, it's just a matter of you need to be sure that you have documented those payments and what they're for. So if you ever get audited personally, you can show that they are a business expense. But you probably don't have a filing requirement. I have some people that have remote work from out of the country that don't have the requirement, and then I have some that do. But the ones that do it, again, I think it was because his foreign worker had a United States filing requirement, and so then there was a withholding and filing that they had to do on the 1042. Yeah. Okay, so let's talk real quick about some of the other things, the other kinds of taxes. State income taxes, so we said Texas has none, so we're not going to stop there. Franchise taxes, if you are an LLC, you will need to file an ownership information report by May 15th with the Texas State Comptroller, and that's the same place you would file your franchise taxes if you grossed over the 2.7 million. That number changes every year. Franchise tax is not based on your net income, it's based on gross income. So you can be losing money and still owe franchise tax if you make it over that limit, and if you do, good for you. That's another thing I always tell my people: if you owe taxes, it's a good thing in a way, because that means you're making money. Franchise tax, state and local sales tax. A lot of you do sales taxes. So sales tax is a local tax. It's by your state and your surrounding areas. You would file with the state comptroller. The comptroller has a list of companies that almost anybody who sells a good owes sales tax, and a lot of services owe sales tax. If you want to know specifically, you need to look up on the list and see if your service is one of those taxed services. I was trying to think of someone who does a service. Rentals, if it's a short-term rental, it usually owes tax as well. Like I was thinking, I rented a tiller from Home Depot, and they charged me not only rent, but tax on that. So those are filed monthly, and I'm not a sales tax expert, but the payments I see are monthly, quarterly, or annually. Probably depends on how much tax you owe. Local property tax. If your business owns real property, and if you own real property, you owe property tax. If your business owns tangible personal property, like a lot of chairs and desks and computers, you owe personal property tax.
Because they sent me a bill, that was like.
Right, and you're like, what? And so there's a rendition that you do by April 15th to your county tax people to tell them what your assets are. And right, and you want to do that, but you want to do the rendition, because if you don't do the rendition, they're going to say, well, you have a snow cone selling business, and snow cone selling businesses usually have machinery to make the snow cones, and it's usually about this much, and we're going to tax you for that if you don't tell them what you really have. So there's a rendition you fill out from January for the assets you own on January 1st by April 15th, and then they'll tax you in October based on that rendition. But that way you get to tell them exactly what you have. Everyone who owns personal business property is supposed to file that. They don't always know that you're a business, but when they find out, they'll send you a form and tax you. Federal excise tax, this is the one we don't hear about much because it's kind of a weird little tax. It's not on income again, it's on different things. A lot of things like gas and airlines and sports equipment have this kind of a tax. I have a client who makes heart stents, he pays the tax. And I had a guy who made fishing lures who didn't know he needed to do the tax. I didn't know that either. I'm not a federal excise tax expert. He liked to fish, he made lures, he sold them out of his living room, and they came back and taxed him, and it turns out it's a 10% tax, completely wiped out his profit margin. He doesn't sell fishing lures anymore. But, and the resources, there is a publication to find out whether your particular thing that you make has an excise tax, and you just need to look it up because your CPA probably doesn't know. That's not something that we keep in our back pocket. Payroll taxes. If you have payroll people, you'll have to pay payroll taxes. My advice is use a payroll company. Go to ADP, use QuickBooks Payroll, use Paychecks, use Gusto. There are reports that have to be done monthly, there are reports that have to be done, or payments that have to be done monthly or sometimes semi-monthly. There's filings quarterly, there's filings annually. If you mess up your filings, the penalties are punitive because that's the only kind of way they can get you to do these. You don't want to mess them up, hire a company to do your payroll. If payroll taxes are another thing you pay as a small business owner, just because your income goes to your personal tax, where it's called self-employment tax. You pay Social Security and Medicare tax on your earnings if you've made it, as well as federal tax. So that's what we call payroll tax. It's Social Security and Medicare. And also when you're an employer, it's unemployment insurance. And that's so if you ever fire your employees or that they might be able to get unemployment. There's a new report this year. There's payroll tax. Since we're out of time, if you have anything specific on any of those, I'll be happy to talk to you. But yes, ma'am.
Just a quick question.
Yeah.
Early on, you talked about the type of business structure that frequently people say, oh, you do that requires double taxation. What is that business structure?
Corporation.
Corporation.
A C corporation.
C corp.
Yeah, sometimes it'll just be called corporation, but to me, the term corporation it encompasses both C corps and S corps. C corporation is the one that has double taxation. S corporation is the flow-through entity where it'll flow through to your personal return, and so it's only taxed once at your personal return level.
So I'm curious,
Mhm.
like several questions kind of tied around that.
Sure.
And I don't want to take it, but do you consult with small business owners on helping them determine what type of business structure to set up based on?
Yes. So what might you do in S corporation? It would be to avoid some of those payroll taxes usually. In an S corporation, you have to take payroll and pay payroll taxes on a reasonable wage, but any income after that reasonable wage then will flow through to you and only get taxed with federal tax, where if you're a partnership, the flow-throughs get federal tax and payroll taxes on them, no matter what, 100% of it. So that's often a reason why you do an S corporation. And yeah, your CPA would be able to consult with you and see. There's other drawbacks though. I mean, there's some other things that if you're big into setting money aside for retirement, that's limited to your the taxes that you've paid payroll tax on. So if you've taken a reasonable salary, that's all you can do your retirement based on. If you're 100% of it is got payroll tax on it from a partnership, you can do your retirement based on 100% of it. So there may be other factors that you want to consider. So there's pros and cons of all entity structures.
So as part of your services, you can.
Yeah, we would talk through all of that and try to decide, you know, what are your objectives, and so what business entity works best for you based on what your objectives are.
And then a last question.
Mm-hmm.
Once the business is established as one kind of entity, can it be changed?
It can be changed. It can't be changed back and forth over and over and over. There's a time frame that you have to wait between changes, but yes, you can change it. This is a new report this year, Beneficial Ownership Information Report. It is not a tax form, so it doesn't really apply to taxes, but it applies to entities. So if you have an LLC, you will need to file this year. It's with the Federal and Crimes Enforcement Network, and it just wants to know what your company's name and information is, like the EIN. It will want to know who the beneficial owners are. Basically, that means anyone who owns 25% or more of your company is a beneficial owner. It wants you to upload either a driver's license or a passport picture of the beneficial owners. And this is, I'm sure, so China or Russia or all these things we hear about politically, you know, they want to know who owns the companies and who's getting the money. And if they need to research it, this is going to give them a database now of everything. This is due January 1st of 2025 for current businesses. If you're forming a new business this year, you're supposed to do it within 90 days. If you form the new business next year in 2025, you should do it in 30 days. The rule is going to be that you need to file it within 30 days. If you have a change, you're supposed to update it within 30 days. Can you do this yourself? Yes. I gave the link for it. It takes me about, of course I have to document things, but it takes me about 15 minutes to do one. I have an attorney friend who is charging his clients $100 to do it now, and it's going to go up to $500 if they wait till after June. But you can do this yourself. Yes, ma'am.
Question. So I'm in the process of taking full ownership of our location and our small business. So would my current partner be part of the filing if I'm going to be full owner in January?
I would think that since the form isn't due till January 1st of 2025, if you're going to become full owner in 2024, then I would file it after that and just put yourself as full owner and as the beneficial owner. Any other questions? Yes, ma'am.
So would this count for like the sole proprietors?
Only if you're a state entity, so if you're an LLC. If it's just you doing business as a DBA or whatever, that's not required. Yeah.
Thank you.
Anybody else? Let's see if there's anything else big that we missed here. Filing deadlines. Well, thank you so much. And I'm a little new at this, so I don't know how fluid that was for you, but please reach out to me if you have any questions. Let me go ahead and give you my phone number if you do, because I don't think that's in the information. 469-236-3373. Laura Welker, Welker. I do not answer numbers that I don't recognize, so please leave me a message and I will return your call and answer your questions for you.